Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong historical monthly support and demand area. In fact, what we can see is that from here, all these previous rejections to the downside were created. So every time that the market reached this level, it got rejected to the downside quite aggressively, therefore respected as strong supply and resistance. Now, the market has just broken above that zone, so all this previous resistance is now turned support here. And the market has already retested the previous resistance turned support and is currently rejecting it to the upside, because when we have a strong level of structure and the market has already respected it as resistance in multiple occasions, once the market manages to break above the zone, at that point, all that previous resistance is turned support. And what you would naturally expect is for the market to test that zone and then potentially to reject it to the upside, which is in fact exactly what we are experiencing right now with the market rejecting to the upside this strong support level. So here on the monthly, everything seems quite bullish. We can notice this strong impulse and now the start of a correction. Now, this is very normal because in every uptrend, you never expect the market to just go straight up. You expect the market to create a series of impulses and corrections. So every time you would expect the market to create new potential monthly higher highs and new potential monthly higher lows along the way. So from a monthly standpoint, if we want to now measure the correction, we have to take our Fibonacci from the low to the high of this impulse leg, which would show us how we have a 0.32 Fibonacci retracement lining up at this area, which the market has a good probability of wanting to go and test and then to reject to the upside. And we can also notice that the market has just created this candle here. Now, when there is a candle like this, so with a very long wick and a red body, you would usually expect the next candle to at least try to fill in the wick, because when you have a wick like this, it means that actually on lower time frames, for example, on the weekly, you actually have an impulse and a correction, in which the correction is exactly the wick that we see here on the monthly time frame. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is that at the moment we have simply a consolidating market from a weekly standpoint, creating this triangle formation. So when there is a triangle formation, it essentially means that the market is at the same time creating lower highs and creating higher lows. And at some point, this means that essentially there is no clear prevailing force in the market. So neither the bulls nor the bears are in control of this market at the moment. And it is simply sideways price action, or better said, it is a consolidating market. So from a weekly standpoint, it is quite clear how the market at the moment can obviously create some movement, but it should be in between these two areas. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, what we can notice is that here we have a very strong structured zone. In fact, this is a previous level of horizontal accumulation, and at the moment the market is heading straight inside it, testing what kind of demand and support we have inside of the zone. It's also important to keep in mind that in testing the area, the market seems to be creating this M pattern, which is a bullish pattern, because in general, after the creation of an M pattern, you would expect a potential push higher. And we can see, for example, a previous M pattern here, where the market created the M pattern and then got rejected to the upside. So there's a good probability that if from here the market will go for a deeper test of this demand and support zone, then the market could follow with a potential rejection to the upside, potentially fueled by institutional longing. Now, speaking about institutional longing, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing precisely on gold, what we can notice is that with the last reports, net positions have been increasing. We went from having 234.3k net positions up to having 275.5k net positions. So we had a clear increase of the net positions, making gold stronger, because with institutions moving to the bullish side for gold, this obviously makes gold stronger. And we can see, in fact, how at the moment institutions are sitting with 324,000 longs compared to only 48,000 shorts, obviously making gold much stronger. So as gold is strong, this increases the probabilities that if we will see even more longing from an institutional perspective inside of this area, at that point we could see a potential push higher. So if the market will continue testing this demand and support area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside for the market to go and complete this M pattern, the neckline. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.